How to start investing if NFT is just 3 letters to you and Dow Jones sounds like a rapper's name? The bright side of life is with you and will help you find it out. What are investments? There are many ways to make money from money. But before we go ahead, like this video and follow for more great ideas for life. Stocks were invented back in the 16th century, though only the last decades they have been talking about cryptocurrencies and venture funds. We'll talk about traditional methods that are considered to be proven and reliable. Real estate investment. Apartments are still attracting investors. But the acquisition will not be repulsed quickly. The average yield is 4 to 6%, and the payback period is 14 years. Such investments have a high entry threshold. It would be nice to have several $1,000s in your pocket. Investments in precious metals and stones. Gold bars can be considered as a defensive asset. The metal, as a rule, rises in price during periods of economic downturn. It is unlikely that you will be able to make money quickly by buying gold, but it is quite possible to have savings in the long term. Purchase of securities. These include shares, bonds, promissory notes, bank certificates, and other documents. The investor themselves chooses the degree of risk. You can buy bonds of a reliable company that bring a small profit. And if you have strong nerves, invest in shares of a small firm. You can profit from dynamic growth, but there is also the risk of losing a large part of your investment. Futures and options. Buying it, you do not acquire the asset itself, stocks, bonds, currency, but the opportunity to buy or sell it is at a predetermined price. This option is suitable for experienced investors, because asset prices can go negative and you can remain in debt instead of making a profit. Mutual investment funds. A good option for those who don't want to constantly monitor which securities to buy and which to sell. Funds combine investors' money and invest in various assets, stocks, bonds, real estate. They are managed by a special financial organization. Funds can be different. A share in an open fund can be bought or sold at any time. In an interval fund, only in a specific period, for example, once a quarter. Closed-end funds are created for a period of 3 to 15 years, and you can purchase a share at the time of formation or at pre-planned intervals. It is impossible to redeem a share ahead of time, only resell it to another investor. If you are just starting to invest, choose mutual funds that pay out. They allow you to earn on the growth of securities and receive income from dividends and coupons on bonds every quarter directly to your bank account. What are the advantages of traditional instruments? 1. It's more predictable. The popularity of non-fungible tokens is either growing rapidly or falling just as rapidly. And securities is a tool that has been proven over the years, and surprises are unlikely to spoil your financial plans. Of course, investments are always associated with risks. But there are real companies behind stocks and bonds, so you can evaluate how much they earn and whether there is potential for earnings growth in the future. As of NFTs, the situation is less predictable because it is difficult to explain their value. On one hand, the buyer of a tokenized tweet or GIF with a cat gets the right to the file. On the other hand, nothing prevents other users from copying it, since it's not regulated by law in any way. 2. You don't have to be an expert. You don't have to be a wolf from Wall Street to receive dividends. It is enough to invest in a mutual fund. It is managed by professionals, and you can start investing with small amounts. The securities market has transparent regulation and a built infrastructure. Another plus is that you can buy and sell securities and fund shares any day. 3. You can choose different investment terms. If your task is to have savings, invest for 5 to 10 years, stocks, precious metals, and corporate bonds. And, to earn money for a vacation or pleasant little things will allow medium-term investments for a period of a year. Corporate bonds with a high credit rating, called A, and are considered reliable. It indicates the ability of the company that issued the securities to fulfill financial obligations. In addition to a group, there are documents with a rating of B, medium in reliability, C, close to bankruptcy, and D, defaulted. If you want to immediately invest in different stocks or bonds, you can buy a share in a mutual fund. How to start investing. 1. Set goals. Think about what you want to receive regular passive income, gradually build up capital, or maximize profits. Determine startup capital. Never invest your last money. Income from securities is not guaranteed, and therefore you need to spend the money that will not be needed in the near future. 2. Stock diversification. Don't invest in the stocks of one company or industry. As a rule, the prices for such securities follow the same way. Together they either rise or fall. In order to receive income on the general growth of the market, you can buy a share from a fund that invests in the shares of blue chips, large reliable companies. In addition, there are gold funds. These allow you to receive income when the price of precious metal rises and at the same time don't blow your mind where to store coins or bars. 3. Periodically evaluate portfolio performance. Invest small money, but regularly and for a long time. Even if at the start an increase in profitability by 3 to 5% per annum seems insignificant to you, in the long run it can lead to impressive results. Review your portfolio from time to time and buy more assets. Don't forget to like this video and subscribe so the bright side of life is always with you.